Last week I was this close on buying Adobe. The stock is down 50%, the valuation looks good, it screams buy me, but right before I pulled the trigger I found 3 problems that completely stopped me. Is Adobe the best value on the market or it's a trap? Today I will show you the reasons why I really wanted to buy and the 3 deal breakers that are making me wait. My name is Adri, I've been investing for 20 years. I invented my own investing method, the value ratio, but I'm a YouTuber, not a financial advisor. So, Adobe, ticker ADBE, price at the time of recording $346, Adobe is down 50% from its pandemic peak. And almost everybody agrees, the stock is freaking cheap.
ADBE, Adobe. This stock is down about 30% in the past 5 years. I've come to the conclusion this is best risk reward in the market. It's the best risk reward in the market, bar none, and certainly the best risk reward in big tech.
It is very cheap. It is still growing. Adobe stock looks ridiculously undervalued. And so I will be recommending or rating Adobe stock as a buy.
At first glance, I agree. Valuation is good. My favorite Adriconomics metric, price to 5 years forward earning power, is just 12. Right here on the green chip zone of the chart, close to my dear friend Novo Nordisk. Don't worry, I'm not gonna bore you with 20 minutes complex calculation on why it's cheap. Take my word for it, it's cheap. It's not like sell your house and put it all in Adobe kind of cheap, but valuation is good. Before I tell you the risks, let's look at the sentiment. Overall, very negative. Investors currently believe that Adobe is in trouble because of AI and that Canva is making Adobe obsolete. I don't believe that's the case. To start, the fundamentals tell a completely different story. Revenue is up, free cash flow is up, and operating margins are very stable at 36%. Does that look like a company that has been destroyed by AI? I don't think so. Professionals need Adobe. I've talked with several designer friends, no one is moving to Canva or replacing Adobe with AI. I've also asked Reddit, has anyone actually ditched Photoshop for Canva or AI tools? Top answer, nope. Second top answer, laughing at my silly question. Redditors gave me 0 likes and they didn't even hear my Italian accent. Click the like button, grazie. Actually, in 3 days will be exactly 1 year since my first video on YouTube. It would be great if you could leave me a comment of happy anniversary, grazie again. Anyway, Adobe sentiment is very negative for a story that's not true and that's very bullish. But now we need to talk about the
dark side of Adobe.
Low valuation doesn't tell us anything about the risks of this business. We just established that AI isn't damaging revenue today, but that doesn't mean that it won't damage it tomorrow. Let's face it, Adobe's moat is getting weaker. 5 years ago, if we have to edit a picture, make a thumbnail, design a logo, we had no other choices but Adobe. But now, not the same. In my last video I made this image with Gemini and my thumbnail in Canva. Oh, did I mention it? I'm an Adobe's client. I'm still paying for their tools, but I use them less and less and I'm thinking about cancelling. Their competitive necessity is getting weaker. Second problem, the efficiency trap. Adobe is integrating AI everywhere. That's amazing. Tasks that took 3 hours now take 3 seconds. But that is exactly the problem. Right now, Adobe's business model is based on seats. If Coke hires 100 designers, they need 100 Adobe subscription. But if AI makes this designer 10 times more efficient, Coke only need 10 people. Fewer human, fewer seats, less revenue. Adobe is effectively selling the very tool that allowed their customer to buy less of their product. Now, Adobe's management isn't stupid, they are aware of this issue, so their solution is to pivot into a hybrid model. They still charge for seats, but now they also charge for AI credits, so we pay every time we use AI. The issue for investors like us is the extra uncertainty. Will this new business model really work as well as the old one? What are the margins? Will Adobe be too dependent from Google or OpenAI? Lots of questions, and right now we have no certain answer. Last point, and I think it's a big one. We established that professionals need it, but everybody is pissed off by how much Adobe is stretching the price. Over 1,000 euro a year each person for Creative Cloud. Like, what?
People hate Adobe now. Everybody just hates it, but...
And I understand. Customers are always mad when prices increase. Netflix and Spotify, they raise prices all the time. It's not nice, but we stay because they provide great value for the money. Maybe we try to quit Netflix because it's a waste of time and we get bored, not because it's expensive. Adobe is different. I'm telling you, clients really want to quit. They hate the company.
Adobe are kinda evil.
I have severed all ties with Adobe.
They feel forced to an absolute extreme. Look how many Reddit complaints. Check this out. Adobe jacked up price again. Fuck, we need a proper alternative to Adobe. They've got a complete professional monopoly and they are extorting it to the kingdom come. 1.2k upvotes. Do you really want to invest in a company that makes its customers feel extorted? Not my first choice. However, I will buy almost anything for the right price. My fair value for Adobe is $440. But for a company with this many risks, I demand a big discount. So here is the plan. I'm hoping for one more big sell-off. Maybe investors got scared because of the cost of integration of the new SEMrush acquisition, or maybe they don't like the guidance on this week earnings report. Whatever the reason, if the stock crashes under 300 or ideally under 280, I will buy. At that price, we are back at 2019 levels, the upside becomes too good to resist. Until then, I'm waiting on the sidelines. If you want to know 2 stocks that are already irresistible, and that's why I bought them already, I would suggest Novo Nordisk on this video or Molina Healthcare on this other one. Thank you for watching, peace out!